The Fed prints over $100 billion as the repo bailout intensifies. Next on your 4-Minute Crypto Show. Today's show is from a post by Martin Young at Bitcoinist and brought to you by eToro. The New York Fed added more than $111 billion to the financial markets this week. According to a Wall Street Journal, the intervention came in two parts. Part one was overnight repurchase agreements totaling $76.9 billion. And part two was a 14-day repo totaling $34.9 billion. Now, crypto industry observer, Rhythm Trader, well, he didn't miss the irony when he tweeted, the Federal Reserve had to loan banks the equivalent of 12.7 million Bitcoin last night to stabilize the financial system. These repo interventions take in treasury and mortgage securities from banks in what is effectively a short-term loan of central bank cash, collateralized by the bonds. The aim is to ensure that the financial system has enough liquidity and that short-term borrowing rates remain under control. The report added that the Fed is also buying treasury bills to increase the size of its balance sheet and to add permanent liquidity to the financial system. These repurchase agreements have been going on ever since the financial system started springing leaks in September. The situation arises when piles of cash and pools of securities meet, resulting in more than $3 trillion in debt being financed each day. The banks are clearly running low on cash reserves, and the current repo market mess is a sign that the banking system lacks the buffers needed in times of turmoil. They're relying on the Fed to keep printing money to bail them out. There is an additional conflict between the central banks and President Trump, who is still angling for negative interest rates. According to Reuters, Fed Chairman Jerome Powell told Congress that negative interest rates sought by President Trump are not appropriate for the U.S. economy. The Fed has already cut rates 3 times this year. Hawkish signals from the U.S. Central Bank caused safe haven assets such as gold to inch down this week. Since the beginning of the month, gold has lost 3% and is down 6% from its 2019 high. Bitcoin has followed suit with a slide of over 5% since this time last week. The longer-term outlook for both assets is much brighter, especially if the leaks in the U.S. economy are not repaired. Increasing inflation and decreasing dollar values will emphasize how important it is to diversify and how crucial stores of wealth will be when the monetary walls come tumbling down. Now, so will people flock to Bitcoin in the next financial crisis? Share your thoughts in the comments and don't forget to subscribe at 4minutecrypto.com/subscribe for a new episode of this show every day of the week or every weekday. Now, let me tell you about my sponsor, eToro. eToro is one of the largest trading platforms in the world with over $1 trillion in trading volume. U.S. customers can trade the most popular cryptocurrency assets with transparent fees. If you're not ready to trade just yet, practice building your portfolio with eToro's virtual trading feature. Best of all, you can connect with 12 million other eToro traders around the world to discuss trading, charts, and all things crypto. Create an account today at eToro.com. That's eToro.com. I'm GaryLeland, the Crypto Podcaster, and thanks again for joining me on another 4-Minute Crypto Show. This has been a CryptoPodcaster.com production.